Let's take it across to Mr. Sanjiv Bhasin, who's joining us on the show as always. Mr. Bhasin, good morning. Good to be speaking with you. I wanted to begin by discussing this entire consumer durable space. We were just discussing Havells. It's one stock which hasn't moved much, but yet it's one stock that doesn't correct either. And of course, on Whirlpool as well, there was that fresh commentary that we got from the global CEO talking about the reason for offloading some stake in the Indian business. And the reason they gave was that the stock trades its expensive valuation. They expect the valuation to come down, and they clearly saw an asset arbitrage. Do you think this entire space is a bit heated up?
Good morning, Anisha. You have very, very marquee names which have gained market share, and there's even though the unorganized sector exists, I think Voltas, Havells, and say Crompton, they are really the ones which are the big players. Yes, Whirlpool in the white goods is a very expensive stock, but it has always been a brand which has been admired. It's like a D-Mart or a Asian Paints, something of that category. I think that this is a very sweet spot given that middle incomes are now rising, and you've seen that across the board there are no coolers. Everyone wants air conditioners, and the advent of LED and the whole gamut of appliances which all these companies have been stellar performers. Voltas also on the back that the Middle East cooling tower business, which generates about 20% of their revenue, that has been in a sweet spot. And the N Chandra indicated that our consumer facing arm is going to get more mileage from us. Now Voltas as a disclosure last year in June at 750 was my top buy, and we own both Voltas and Havells from much lower level, 995,000 on Havells. And you are right, they may have not performed, but that's in line because everyone has been avoiding the consumers side of the market. I think rural incomes are rising, and if you want to play, consumer is going to be the next play, given the advent of preference of bigger names and preferences for brands. That is why we suggested Bata and Patanjali, but I would definitely advocate a buy on Havells. As a disclosure, both Havells and Voltas have been in our portfolio. Voltas has been a total outperformer, and Havells has been a very, very lukewarm performance. But given the type of businesses they have and the performance of Lloyd's now after the merger, they are in everything over there as far as consumer appliances go.
Sanjeev, hi, morning. Have to ask you about Paytm, considering you were the patient one, still invested in the stock. Wanted to understand what is it that you've made of this latest move by Vijay Shekhar Sharma of, kind of messaging to the regulator that he's disassociating himself from Paytm Payments Bank by stepping down?
Well, finally, the ego is being let loose, and you're realizing you have to think of the bigger good. It's the case like the Goenkas don't want to let go with 3%. At least Mr. Vijay Shekhar has taken the right move in the broader perspective. Now we are aware that there may have been the KYC issues, and they've denied that there was no money laundering because they don't have an foreign exchange license. So I think it will set to rest any other speculation. And now with the change in the governing body, it will at least give you a better image of the payment bank. What the regulator takes gives them time. That all is in the domain of the regulator. They will wait for the report of the ED and other things, for which I think they've been absolved of a lot of things. So it's a matter of time. On the other hand, the way they've gone about of increasing the banks where they can share and so on, at least puts the business right back on track. Yes, the margins and the accretive will see a little bit of a hit, but we still think the longer term story of Paytm seems very, very strong. We are staying put. We will wait for more. Only thing, this adds more weight on the side that now the governing body will have more teeth, and at least there will be unanimous board of directors who are more appreciated by the central bank and by the regulators. That is what I have made out of it. Rest we will see, but I still think the stock is going to see volatility. We would recommend that let it stabilize, let these things die down, and then you can take your call.
Yeah, and volatility is something, Mr. Bhasin, which will be there in Vodafone and Indus Towers as well. How should one approach the telecom sector now?
So Anisha, it was a scream at 11 rupees and at 205 rupees. Both those stocks are in our portfolio. We think that this is a very, very sweet spot for the turn of things. The receivables from Vodafone means Indus is in a very sweet spot. They've already provisioned for the so if anything comes as a right back, their margins last quarter were the strongest. I still think 275 is attainable there. And Vodafone, rightly so, we will wait for the what the 2,000 crore which the promoter has raised will be there, and what's the guideline. But the bigger thing, Nisha, will be if they do get some foreign player or a foreign investor to pump in. They need more money on the 5G side. Their ARPUs are growing, and we realize that they are there. Now, whether you can say 2.5 players or 2.75 players, they are still half of 0.75. And if you see on a 11,000 crore turnover, they did an EBITDA of 4,500. So I think they are there to survive, but the debt overhang will constantly remain as something to be addressed till they raise more capital. So let's wait and watch what the capital raising is. Indus Tower definitely is the bigger gainer because of the capital infusion.
Okay, Indus Tower is the bigger gainer if Vodafone Idea does get that fundraise going. But Mr. Bhasin, what about the PSU banking names? Of course, a lot of them have run up. Are there any select names that you would still recommend as buy?
Firstly, Anisha, let me also say that everything in the AB stable is doing well. AB Capital. Now look at a stock called ABSL AMC. I've been bullish on that all the way from 400, 425 level, and it is underperformed. But asset management companies are here for the next 20, 30 years. I'm just giving a call. It is in our portfolio. We have a very, very good long-term view on it. But at 500, it has just given a fresh breakout. It has hit a new 2-year high. I think ABSL AMC in this table is a very, very sweet spot to be in, given that it has the holding company of the AMC, it has AIF, it has insurance, and all put together. That stock can be a real outperformer from here. I don't rule out 650 coming in the next 3 to 6 months. On the PSU banks, I would be more overweight on the private banks. ICICI, HDFC, Axis, Kotak. That is where I think there will be more delta to be gained over the next few months. But in the meantime, we still think that State Bank stands out over there. The rest we will not chase. We have booked profit across the board in some of them, and we are turning our preference towards large cap private banks.
Sanjiv, just wanted to get your sense in on how much more damage do you foresee for Asian Paints before it prices in another strong player in the market, namely Grasim?
Well, first to Dixon Technology, that is one of our top holdings all the way from 3,700. And we have no intention to get, worried by like the Gabbar Singh of Sholay, which is CLSA and Jeffries. At 7,000, when a stock is gone from 35 to 7, there will be ups and downgrades, but stay the course. EMS is here for time to come. We think Dixon finally will even cross 10,000. Look at the language of the management, look at the performance, look at the data which speaks for itself. But like we said, there is an opportunity to buy and sell. I still think any decline in Dixon is a buying. Same is the case with Asian Paints. We saw the same downgrade for Eicher when Harley was launched for Hero and Triumph for Bajaj. And after a couple of weekdays, the stock bounced back purely on the back of Royal Enfield only gaining market share. So I think Asian Paints deserves to be done by a SIP. Let the initial flurry of downgrade get over with, but that's a brokerage call. On the underlying business, it will take miles before Grasim can dent into the market share. It will be a little threat, but the pie is big enough for all to survive and Asian Paints to grow. We continue to think consumer names are going to outperform at least in the near to 6 months. And we think if you have to take some chips, it's to take off the momentum plays. So I continue to hold that Dixon is one of our top holdings, and we continue to be very, very bullish on that space. Asian Paints is something which we have not that much of exposure, but we think we will add closer to that target which most have given, which may not come in the near term. But this is one blue chip along with HDFC, which you must have in your portfolio.
Okay, point taken. On that note, Mr. Bhasin, we let you go. Appreciate you making time and speaking with us.